Welcome to tutorial 9 of Finance and Accounting. In this tutorial, we are introducing financial statements. Before we proceed, let us subscribe, like, and share in order to receive all Pitram Tech tutorials. I want to indicate that these tutorials are ideal for students, managers, CEOs, directors, business people, entrepreneurs, university students, teachers, and lecturers all over the world, from Africa, Asia, North America, South America, Europe, Antarctica, Australia. It is important to indicate that the financial information is communicated in the form of financial statements. Remember, the managers, the directors, they prepare the financial information and present the information in the form of financial statements to the ultimate shareholders or users of the financial information. These financial statements are the summaries of the general ledger. We'll get to know more about the general ledger in our later tutorials. The classification, recording, analysis, and interpretation of financial statements is crucial for better comprehension by the decision makers, those users of financial statements. For instance, when a company borrows money from the bank officials will then analyze the financial statements, for instance, the balance sheet, to realize the financial position of the company. They can get to understand the real owners of the company by just analyzing that particular financial statement, which is called the balance sheet. They can get to understand whether the company's financial health is good or greatly liquid or ailing or is likely to be liquidated anytime soon. Also, shareholders of the company use these financial statements to better understand and take informed decisions, and also to understand how the company is being operated by the company management, so that they get to understand as to whether the company management is doing the right thing or not. So shareholders may decide to make some changes in the board of directors of the company on the basis of the information they got from the financial statements, and ultimately to the management of the company or the business entity. Also, investors on the other side, they use these financial statements to be able to be informed about their investment decisions in the company. Based on this financial information, they can also decide to invest or not to invest at all in the company. Having said all that, there are 4 different types of financial statements as indicated here, namely the balance sheet, the income statement, the statement of retained earnings, and the cash flow statement. Let me mention them once more. The balance sheet, the income statement, the statement of retained earnings, and the cash flow statement. In this tutorial, we are going to focus more on the balance sheet, and the other 3 financial statements will be dealt with during our tutorial number 10. Let us deal with the balance sheet and describe it so that we better understand it at this moment. What is the balance sheet? The balance sheet is the super summary of the general ledger. Don't worry, we'll get to know these general ledgers and the others. But for now, it is the super summary of the general ledger. The balance sheet is the statement of the financial position of the entity at any given point in time. It is very crucial that you understand that it is at any given point on a particular date. If it is the balance sheet drawn on the 31st of December 2021, it will be the balance sheet at that date of the 31st December 2021. It is also called, that is the balance sheet, it is also called as such, that is balance sheet, because the balance sheet should always balance at all times. The balance sheet should always balance all the time. Because the balance sheet has got roots from the general ledger, therefore the general ledger also has to balance all the time. The balance sheet shows, you will see when we are dealing now in details with the balance sheet, it shows the assets, the liabilities, and the equity. As you know, we have spoken about this previously, where we said the equity is also called the owner's equity, the stockholders' equity, the stockholders and owners' equity. Those are all different, they also refer to equity. The balance sheet is also called the parent of all financial statements. You will see that when we are dealing with the examples of these financial statements. It is the parent, it is the mother, it is everything for all other financial statements. These financial statements will be discussed in greater details in the later tutorials. Continue with tutorial 10 as you will be introduced to the other three types of financial statements. These tutorials are offered by Pitram Tech. Please subscribe, like, and share in order to receive all Pitram Tech tutorials. And also check other tutorials of Pitram Tech